While the consensus view is that easy monetary policy is here to stay for a while, Bank of England Governor Mark Carney gave investors a reality check after cutting bank capital rules and saying that Brexit is not all about stimulus. Let's talk more with Bryan, Chief Investment Officer of Bordier, Singapore. So we've been in a risk-on environment for the past week or so after all this turbulence emanating from the shock outcome. So does this mean that this exuberance is coming to a screeching halt?
What are the long-term implications for Brexit? I think nobody knows. I don't think the Bank of England governor knows. I don't think the Prime Minister of the UK knows. The politicians will take, at best, 2 years to figure this out.
So if we have a 2-year time frame, at least on the immediate horizon, what do you do now? Do you see bonds overshooting? Do you see equities already flirting with record highs, pulling back? What are you getting into now?
The key to investing safely is to avoid all the retail money and to avoid chasing capital flows.
You think that 8 shares are reasonably valued. They're down about 10% year to date, but you also have the China overhang to deal with, the slowing economy, the weak currency, etc. And then you talk about other exotic markets like Russia, Turkey, Egypt. However, when we go back into risk-off mode, these markets tend to get hit even more severely.
These markets are cheap, but they're cheap for a reason. And I'm in no way suggesting that one go and buy these markets. For example, China. I think we've got a good handle, globally and the investor crowd. We understand the risks in China. We understand the economy of China. But nobody understands how those markets are going to react.
I'm surprised to know that you're looking at the very risky space of Cocos, Contingent Convertible Bonds. That is getting right into the heart of the storm in Europe, where you've got bank valuations all the way from Deutsche Bank to Banco dei Paschi in Italy. Some of these banks are trading at about 20% book value, and there are serious questions about whether some of these banks can even make their coupon payments.
I like to invest in anything that's getting less risky, even if it's risky to begin with.
Isn't this the riskiest thing right now?
Well, the riskiest thing is equity. Cocos are one step senior. Right?
Okay.
The risk is that you get triggered and you become equity or you take a write down. So the riskiest part is equity, and I wouldn't buy the equity of banks. In fact, banks are being forced to recapitalize, and that means more first loss capital ahead of me. Now, what's the trigger risk? So before I get triggered into equity, certain things need to happen, and one of those is the Tier 1 capital ratios of these banks need to reach their trigger levels. And we are far from that. But
are you looking at the European Central Bank's backdrop for some of these European banks?
Not so much what the ECB is doing in QE or their corporate securities purchase program. That's for investment grade bonds, and they're non-financial investment grade. I'm looking at financials. But this is a different theme. This is a theme of regulation. The more regulated the banks, the more capital they're going to need, and also they're going to have to deleverage their balance sheets. Both of these things make Cocos safer.
Cocos might seem a lot like subprime in the US.
No, they're quite different. So subprime were bad assets, they were securitized, and there was ratings arbitrage going on. The contagion impact didn't come from non-agencies, they came from agencies because they were so widely used as collateral that they began to infect markets that were unrelated to the mortgage crisis.
How much yield are you looking at? What's your return from Cocos?
It depends on the credit quality and the quality of the bank. Obviously, if you get a very high number, you're assuming a lot of risk. But you can get 10% in UK banks, for example, in fairly well-capitalized ones, or you can get high single digits in some of the Eurozone banks.
It looks like you've got stomachs of steel. Well, great to hear your thoughts there, and wish you all the best of luck. Bryan Go, CIO of Bordier NCA Singapore, talking to us about where he is advising his clients to put money.